Hello and welcome to the show, Paul.
Great to be on, Puneet.
So how do you see the Ukraine crisis impacting the world oil markets in the short to medium term?
I think, first of all, there's going to be a lot of plot twists with the Ukraine-Russia crisis at the moment, and there's a lot of uncertainty. I think what it does show at the moment is how tight the oil markets are right now. You've got markets being pushed to the limit. You've got strong demand, robust coming back. Platts Analytics sees demand at 4.3 million barrels a day in 2022. You add that to a tightening supply situation. It's still, we've got OPEC Plus has had issues with capacity constraints for a lot of their members. Then you've got US shale, which has started to see signs of life, but has not quite come back in the same way as yet. And then you've got global stock levels have been depleted as well, and with OPEC Plus spare capacity is becoming reduced. It's lower, and it's getting to areas where geopolitical risk and supply disruptions become much more exposed, much more vulnerable. And now we've got the Ukraine and Russia crisis, which even if the market is pricing in from Platts Analytics viewpoint, probably a $20 premium to prices.
So the relief that we have seen in terms of Brent oil prices from $97 a barrel to about $94 a barrel now, do you think that this relief could be short-lived?
I think we saw just this week now, dated Brent, the physical oil benchmark, hit $100 a barrel, and there is this gap between the physical and the futures market right now, partly driven due to demand for sweet crude. But what the key thing is that prices are a lot like to stay, from Platts Analytics perspective, go too much higher. It's like we see a view around the early 90s in the next month or two, and likely that oil prices will come down towards below $80 a barrel by the end of the year. There is still these extra supply coming on. I think at these elevated levels, you are going to see more supply from your shale eventually.
A lot of experts have said that the prices will shoot up to about $125 a barrel by about June. This is taking into account the demand scenario as well as the ongoing geopolitical tussle. Do you think that these estimates are realistic, or would you say they are far-fetched?
Well, I think there's certainly a bullish narrative in the markets right now. The market is very tight and vulnerable to further disruptions. And there's certainly risks in the market for the prices to go higher. And that's why we see, especially the investment banks, talking up the price in such a way. The question is really about the supply, about this $120 a barrel. It's partly related to whether your view on shale and whether you think whether shale can rebound and recover in some way. How much at these high prices, at these elevated prices, how much will that incentivize further production, further crude coming on? I think prices are going to be volatile, and I think they're going to stay elevated. I wouldn't just be so sure about calling where prices above $100 a barrel for any sustained period of time. But what we'd like to see is prices staying at these elevated levels in the sort of nervous 90s, and as supply continues to increase, assuming some of this supply from the US, from OPEC, from other sources, as it starts to return, we'd like to see prices, a little bit of the sting taken out.
So what is the contingency plan, according to you, that most countries are adopting to circumvent the oil market crisis?
Contingency plans, realistically, when you look at the situation, OPEC Plus, for example, I believe are matching the supply they think is to demand. They're providing the supply they think sufficient.
Do you see OPEC Plus assuming a more proactive role in cooling of the prices?
I'm not sure about OPEC Plus in terms of cooling prices per se, but in terms of OPEC Plus been maintained since it's been maintaining a mantra that it wants to see a balanced market. It wants to match supply and demand, and that has been what it's been trying to achieve. In the past, pre-COVID, we had shale acting as a ceiling to prices often. It hasn't acted as that ceiling, and it's left a lot of the responsibility, much more the responsibility than OPEC Plus in whether and how it manages to balance the market.
Thank you, Paul, for your time today. We hope to see you soon.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.